I was blowing most of my accounts till I realized this in trading. Most traders don't blow accounts because of strategies. They blow accounts because they risk too much per trade. And most times they switch on their risk management. That is to say, most of the time, what they are risking is higher than what they intend to risk. And this causes them to blow their account thinking that strategies is the problem. If you don't know how much to risk, even a good strategist can fail. You can win some trade, but one bad trade can wipe out all your wins which you have had and even bring you to a drawdown. The simple rules which most traders use is the 1% and 2% per trade. So on this 1%, 2% per trade, depending on the account size you are using. So let's say you have a $10,000 account and you have to risk 1% on that particular $10,000 account. So the 1% on that particular 10,000 is $1,000. So for you to know how much you are about to risk on this particular account, most times the problem occurs that you are maybe you are a beginner or you are kind of like still confused between the actual MT5 price and the trading view price. Those prices are different. The price range, they are kind of like different when you place on the broker, the actual broker you are using, and when you analyze and you set up everything on your trading view. Those price points are actually different. So this one might be giving you a price point very far from your entry, that's your trading view. And when you go on your MT5, because it's already on broker, this is live, this is no longer analyzing, it now gets very close to your entry, which is kind of like a slight difference. There's a slight difference on it. Most times your SL will hit on your MT5, which is your broker, and it won't hit on your trading view, and you are kind of like confused, and this is making you mostly blow your account. What I'll help you do in this video is I'll help you to see a few things you can do so you can pass this particular stage of blowing your account, or this particular stage you are on right now, not knowing how much to risk per trade, or risking a specific amount per trade and later on wiping out all your consistency or all your consistent profits you have made. So this is where the risk management comes in, and this is how what I did that helped me, and I'm here to also share with you so it can help you if only you can follow exactly what I'm telling you. And this I've done, I've shared it with other successful traders, and they told me that this particular thing which I've done is what have caused them to also see consistency in their trading. This is what I'm here to share with you in this video. This is what you should do before you enter any trade. You have to have the picture, or you have to have your amount of risk. You have to have your amount of risk in here. You have to have your risks, know your risks before you enter any trade. Leave your win aside, of which you are going to determine how you are going to take your profit via the previous high or previous low, depending on the trend of the market. So know how much you are about to risk on that particular trade which you are on. Define your risks. First, not on your MT5 or your trading view or any calculator. Know what you're about to risk. Be comfortable with what you're about to risk first before going into any trade. What I mean by be comfortable with what you're about to risk is, you out of this $10,000 account that you are risking, so we are using $10,000 for this particular example. So out of this particular $10,000, how much have you calculated? Have you calculated how much you have to risk before you blow the account consistently? How much you have to risk consistently before you can blow the account? So let's go back to the 1% rule. So the 1% you are risking now, you have to blow, or you have to win 10 losing trade before you blow that particular $10,000 account. So you know that once I see my setup, I'm going in with $1,000, and once I go in with $1,000 10 times and I lose the whole of the 10, of which is not that, it's very possible, but likely there is some probability that you will not see any wins, and your wins that you see is going to be more than your loss, so you don't have any fears. So what I'm saying is that know what you are about to risk, know your specific amount you're about to risk before going into any trade. So now, after you know what you're about to risk before going to any trade, here is what you do now that is going to help you. Be ahead of the markets, be ahead of the price, be ahead of whatever you want to do. So what do I mean by be ahead of whatever wants to happen in the market, or ahead of the price? This is what I do, and it's a limit. I pull my limit orders. I use limit orders. So this might sound very simple and easy. You say you know limit order and all of this stuff. Now it's no longer about knowing, it's about the doing. There's a difference between you knowing about that specific thing and doing that specific thing in the right way. So now there are limits order in the market. What I do is before my position, I make sure I come early to my trade to know where I'm about to enter the trade. So right now you are about to enter a price on a 212.00, let's say 212.00, and the market is above the 212.00, and you know that this is where I'm to enter. Now don't wait for the price to reverse back to your entry before entering, because you are trying to still control your risks. You are trying to control your risk management. Once you graduate from this particular level, then you can start using market orders, which is you can start using the current market price to enter your trade. But right now that you are trying to control your risks, this is what is going to help you. Use limit orders. Now you know what you're going to risk. Then you now use limit orders. You know how much you are risking. Before the price comes to your limit order, you are going to move it up, move it down, make sure that yes, this is what I want to risk. This is where I want my SL to be. This is where I want my TP to be. Now you have fixed everything. You are not in a haste. You are not in a hurry. You are not in a rush to enter the trade because the market wants to move and leave you behind. Because sometimes that's the pattern that leads you to over, trade or over leverage your account. The fear of missing out. You have not calculated your risks. You just want to jump in the trade so that the trade won't leave you and go to your TP. So use limit order with that specific risk you are about to take. Use limit order. Set the limit order to that particular place you want. Then your SL to the place you want. You are not in a haste. You are in a calm. You are not under pressure. So right now you are in a calm and you can do everything you want to do in a sensible manner. So after you do this, you now close your trade, close your laptop or your phone, switch off everything, then go off there. Later you come, either it speak or it has given you another opportunity again to enter. So with this you do consistently, you now master your risk and you stop blowing your accounts. And this is also a kind of like a common mistake to most of the traders. Most traders risk too much when they are confident and too little when they are scared. And remember, your goal is not to win every trade. Your goal is to survive long enough to become profitable over time. So if you control your risk, you control your trading. And that's how consistency is built. So with this all being said, try this out and I'll see you in my next video.